Hello, everyone. Welcome to the show. This is Trading with Livevol. My name is Stephen Choi, and this is where I trade my Reg T account using LVX. So just wanted to show you guys what happened. So we had a pretty decent sell-off today, as you can see, 1.5%. Basically, it seemed like from the get-go there was no buyers, and every kind of move up was precipitated with selling pressure. And you can see the S&P 500, how it broken down. The only sector who did pretty good is the oil sector, and looks like all the other sectors pretty much had a pretty bad day. So for me, as you guys know, I skipped yesterday because I was too busy. But as you can see here, I lost today. A few days ago, I think I was long like $650,000 deltas. This morning, pretty much the only good thing I did was sell out of all my longs, or most of my longs. So that's what I have right now. So even though I made pretty good money day trading, like almost $6 grand, it was basically closing out my position in the morning that got me the cash. So I think the issue I had just from trading was I was trading and making money. Just show you guys. Yeah. So I was making money here because I was just kind of getting in and out of position. And this is what happened because I was kind of holding on to the position. So I think the way I'm going to do it is go back to having a shorter duration, maybe like just max of 2 days only, unless I'm winning, then keep the winners going. The other one is long-term bets. So I bought some more YAHOO calls today. As you guys know, I'm bullish on Alibaba, so I keep buying these. Hopefully, I'll get maybe about 10 of those, and I'm still waiting for the dollar. So I sold out of all of these, the ones I were hedging. Now I'm long 20 of these calls. Hopefully I can buy about 30 more. Not sure when I'm gonna do it. Let me actually just. All right, so this is where we're at, maybe around 25, 20. It might be a good time to start getting back in, but I'll see. At some point, I feel like the dollar is going to start strengthening again. So I want to own the calls on UUP. So essentially, I have long-term bets, which are like year outlooks. That would be more like my YAHOO and UUP. And then the shorter-term bets, I think I need to keep it short and limit my risk in terms of keeping a position too long. That's not really working for me. So that's kind of what I have. I know on TV, I always see people saying you should buy VIX when it's low. Just wanted to let you guys know that VIX it doesn't always correlate with the market going down, right? The VIX is showing uncertainty in the marketplace, not necessarily that the market has to go down. So I know a lot of times people say, hey, you should buy the VIX options when when it's low, but you see where VIX closed today at 1544. I haven't checked this, but let me look at it. 1544. So if you look at the VIX here, 1544, but the futures right? If you look at where the future's trading, even though I don't have it on this platform, you can do put call parity, and you see how this is 50 cents and this is $2. Basically, you subtract the puts from the calls, and so the future value is around 1650. So by expiration, they already have it priced higher. So when people actually start, buying these VIX calls, a lot of these assumptions are already put into the pricing of the VIX because it's a derivative of a derivative. So a lot of times people buy these calls, they think like they're gonna make a windfall when the market goes down. But as soon as the market like calms down, basically you're not really gonna get the benefit that you think you're gonna get from the market going down sometimes. Sometimes you do, sometimes you don't, but it's not definite. As well as these are European, so it's not like you can exercise them, right? So basically they're derived against the futures, and you can't early exercise any of these things. So essentially, you're stuck with them. So even if the VIX is trading at, let's say, 40, the option pricing might be only 35. So you might actually have to sell your calls under parity because that's what the futures of the VIX is indicating. So I think the far better way of actually hedging your long position is more like buying puts on the SPY or SPX than buying calls on the VIX. Buying calls on the VIX can make you money, but also you can get duped because, like I said, it doesn't actually predict the movement of the market going down. It's only predicting uncertainty and fear in the marketplace. So you can have a huge amount of fear with the market not having to crash, right? Sometimes the market might crash, but the news is out and the VIX will actually go lower. So just so you guys know, a lot of people trade the VIX and they get burnt because they don't actually understand. They think if you buy VIX calls, automatically if the market goes down, you're gonna make money. That is not true. And I see people on CNBC, on all these shows, constantly talking about buying VIX calls when they're cheap. Well, yesterday, these 15 calls were trading, were closed at 160, and today they closed at 215, right? But if you look at the 15 calls, I'm going to show this to you guys, right? So this is where basically it closed at. Just trying to give you guys a good example here. So at 106, that's 10:06. Right. So basically, 2074. $29, right. So essentially the market was down. If you look at 10:06, so you look at the time over here. If you look at like around 1 o'clock, right, the market was down to the SPX was down to 2074, right? It closed at 2091, right? So basically SPX is down almost a full 1%, and these calls up like 35 cents from when you bought them, right? So to me, and it was only at the very end when basically the market slid way more than you thought that it started popping, right? So even at the end, it went up 20%. But tomorrow, if the market recovers even a little bit, right? So if the market recovers a little bit, or stays here for like next 3 or 4 days. So let's say it kind of doesn't move, which is highly unlikely, but let's say it just kind of stays around here. VIX is going to come down most likely because the fear is subsiding. So you could have these calls and in the end have them be worth the same as when you bought them, even though the SPX went from all-time high down to around 2060. So just be careful. I really don't think the experts on CNBC actually know the VIX, or if they do have traded VIX a lot, I don't think that's the advice that they would be giving. It wouldn't be the advice they'd be taking themselves. So like if I was long a bunch of options, to me, my first instincts to hedge will be buying puts on the SPX and SPY and not on the VIX calls, right? You can do that when you feel like they're going to move together, but just so you know, they don't have to move. They're not correlated, and they're actually measuring 2 different things. Just so you guys know that. So that's about it. Hope your trading is going well. Hopefully you guys have been bearish, unlike myself. But I think what I'm gonna, I scaled everything back, and I'm just gonna try to find some good opportunities to get back in. But for now, at least I'm pretty flat, and I don't have to worry about tomorrow. So take care, and I'll talk to you guys tomorrow.